All right, good afternoon, everybody. This is a speculator at Take Your Profits, and I am here today to conduct some post-trade review operations for the last 3 trades I've recently taken on. I'm going to try to fit in as many as I can here on one video. So let's go ahead and start the day. This was trade number 82, and this was a long entry on the British pound US dollar market. This is what the chart looked like. It was a butterfly pattern completion here at this point of entry, as you can see by the picture. Let me see if we can here's the actual pattern that was traded. And we now have 2 questions to ask ourselves as part of the post-trade review for trade number 82. And the first question was, did everything go as planned? Well, let's take a look at what it was exactly that was planned. Okay. Trade number 82 is a British pound US dollar market. It was decided on the 1-hour chart. My long entry was at 1.5939, and the characteristics of the trade as defined here on the Pro Trader dashboard was that trade was trading at a major level of structure. I did find ratio confirmation, and I did find higher time frame confirmation. I did score ABCD pattern with a 618 retracement, and I did score a butterfly pattern completion at the 1618 extension of the AB leg. Going into the probabilities of that trade, there was a 59% chance of winning with a win-loss ratio of 2-to-1, and total monies won on this particular trade to date, including this particular loss, has been $431. So what was the plan based on this CTS score of 9 that was achieved, which allowed me to trade half a position size, was to trade, as stated, a half a position, or 30,000 units, at an entry of 59.39 with initial targets at 1.6170, secondary targets at 62.48, and trail stops somewhere around 65.70. My stop was a 2 ATR of the entry, which placed my stops at the 1.5868 level. And as shown here, this trade did turn out to be a loss. I did hold it for 3 days, and it was in the Great British Pound US dollar market. That was trade number 82. That was that's basically what was planned. Now, if I describe that graphically to you, you can see here is the harmonic ABCD pattern that I scored. Here's A, here's B, here's C, here's D. This retracement leg, if you can notice here, measured 618. It completed at a 1618 extension of AB, which was also a ratio which was confirmed at a 127.2 extension of XA. I had a higher time frame retracement of a 786 retracement on an underlying upward trend, which is why I decided to take the trade long here at this Fibonacci cluster. As you can see, my entry for trade number 82 was at 1.5939. Protective stops at a 2 ATR level beneath that, and my initial profit targets were 382 retracement of the A to D move. Here's the 382. Actually, the 382 retracement is here at this pink line. My targets were actually set 15 to 20 pips below that to try to front run this particular market. Secondary targets were about 15 to 20 pips in advance of the 50% retracement of the A to D move, in an attempt to front run that market also. As you can see, stochastics and MACD were at extreme oversold levels on the 1 hour chart, and after identifying this probable trading opportunity, I predicted that the market would indeed go north or in the upward direction. I therefore decided to take the trade as per the set strategy as I defined here on this chart, which was also set before I took the trade on the Pros Trader dashboard, and I decided to execute orders at this level, which completed my IPDE framework in executing this particular trade. Now, the trade did not go as planned. The trade did not go as planned. It did end up being a loser on a 50% reduced risk. Once the trade had consolidated at this level, there was a point where it actually went in our favor somewhere about 100 pips, just shy of the 382 retracement. This therefore allowed me to reduce my protective stops by 50%, and it was just below this structure here where price was being protected at, and unfortunately price did go back against that direction to eventually stop us out on a 50% reduced risk, which is actually good, because if price doesn't immediately start going in my direction to take out my initial profit targets, I really don't want to stay in the trade any much longer than I have to, and I do look to start trailing stops on any movement I get in my direction. Unfortunately, in this situation, I did get stopped out on 50% risk, but I kind of look at that as a positive thing, as I did get to protect my capital on a trade that didn't immediately start to move in the direction I expected it to move into. If a trade does not immediately start to move in the direction I want it to move in, I really do look for reasons to get out of the trade, so that way I could look for better, more probable opportunities to make money. So no, everything did not go as planned. My analysis was actually on point. I did have ratio confirmation here at my entry. If you could see, my entry was at the very, very low of any movement up in the direction that I expected the market to follow through with. However, there was no follow through, so the market did not go in the direction I expected it to. So my rules therefore facilitated my exiting of this market to look for a better trade. Anything I could do better? Not really. I think I executed my strategy as precisely as could possibly be done in any market. Unfortunately, this trade did not turn out to be a profit, and the market did continue to move south. So the fact that my rules did call for me to reduce my risk by 50% was actually of great help to the fact to my number one goal of always protecting my capital. So you know what, in looking at this trade further, what I can improve upon from here on out is the executing of a trend continuation trade or a TCT entry, and therefore reversing my position when my trade gets stopped out. That's something that I have not been working on, and I should begin to execute with a little bit more frequency from here on out, being that when my trades do get stopped out, I do have a reason to reverse my position to try to take profits, riding the market in the opposite direction. So being that this trade did continue to move against this particular position, I can improve upon these losing trades by activating my trend continuation strategy and reversing my position to take profits and make up for any losses that may have occurred when I do get stopped out. So that would be the best way to improve upon this trade, is to start identifying and executing the trend continuation trade opportunities that do come up every time a trade gets stopped out. So that's going to be a theme we're probably going to go ahead and push forward on the next couple of videos. And thanks for sticking around and watching this post-trade review for trade number 82. Don't forget, take your profits.